The oil market is in an absolute downward spiral. Whoa! It's literally being slammed, which has very much been the case since the start of the year. 13th of January, actually, when the week of the 13th of January, we really started to see some pace or some momentum within the bear's control, really driving this to the downside. So why are we seeing that? Well, one of the real main reasons, if not the number one catalyst, I must say, is obviously what's going on in China with the coronavirus really disrupting oil demand. You got to remember, they are the whole entire world's number one largest importer of oil, right? Now, given the situation that's going on with the coronavirus, understandably, China's demand for oil is subsiding largely. You got to think as well, right? If productivity is dropping, if work is somewhat minimizing, people are going to be less out and about because of the fears of this virus. They're going to be bound within their home, not making certain trips. Of course, naturally, oil is the demand for that is going to subside, right? So when there is falling demand, what happens to the price? It also falls, right? So how do we look at trying to counter this? We look at potentially trying to withdraw supply from the market, take some back, cut that supply. If there's less supply, then prices should, in theory, rise again. So this is what takes me on to my next point, which is OPEC, before we get onto the chart in a moment. So OPEC, now, they, over the years, in my view, and we've wrote something about this before, they've really lost their significance. They're almost irrelevant. I don't even know why they bother, because they've done these production cuts, right? They have an emergency meeting next week where they're going to try and cut oil production by some 500,000 barrels per day and look to extend that as well. But is that going to do enough to save these falling oil prices? Maybe not. So do keep an eye on it at the moment. Let's just take a look at the charts now. So just taking a look at the weekly chart here for WTI, US oil, the ticker on TradingView. Bring up this is on the weekly chart, by the way, guys. If you bring up the weekly chart, we do have a double top. Now, this first top was here in April 2019, and then our second top area is here, this side of the year in January, obviously just last month just passed. So you've got a double top. Now, with obviously a double top, we have a neckline. So if we look down, the neckline is here, as I've just labeled up there, something that we told our members a little while ago, and that's at that $51 mark. Now you can see the prices currently on the current weekly candle. We are looking to close below that. If we do close below that, that is going to likely leave the door wide open, see some more downside pressure. Now the distance between the head, the top and the neckline, that's about some, 15 bucks. So in theory, I've got this $42 marked up, but we should even break that. But the 42 marked up is the bottom area here, where we saw the back end of 2018, where we then staged our rebound there in 2019. So just keep an eye on that double top structure. As I say, just looking to see a nice firm breakout on the weekly of the neckline there. Other than that, guys, that's it from me. Don't hesitate. Obviously, all of this, all fundamentals, technicals, guys, we do that every day. Freaknetwork.io. So don't hesitate to check out our membership, or to understand all this, forexfundamentals.io. Check out our course. Other than that, let's get it.